Hey everyone, if you're looking to boost your passive income, then investing in dividend stocks is an excellent strategy to do that. So if you're looking at some dividend stocks, I've got two here for you that you can buy that will boost your passive income. Those two dividend stocks are Altria Group and 3M. And what I have here are the two companies' dividend per share over the trailing 12 months going back about a decade. And what you could see is phenomenal growth of their dividends per share over this time. So let's get into the details here. Now, looking at 3M first, you can see its dividend per share was about $2.50 around 2014, and that has more than doubled all the way to $5.98 in the most recent trailing 12 months. So that means if you were a dividend stock investor of 3M around 2014, your dividends per share will have more than doubled in this last decade. And that's the benefit of investing in dividend stocks and selecting good dividend stocks, is that the dividend per share is not static. It is reasonable to expect successful companies to increase their dividend per share over time. So if you've got a dividend stock today and you hold on to it for the next 5, 10, 15 years, it's reasonable to expect that dividend per share to increase over that time. And it's a similar story with Altria Group, which saw its dividend per share rise from around $2 per share all the way up to $3.76 per share in the most recent trailing 12-month period. Again, solid increases in the dividend per share. Also, if you're looking at the dividend yield takes the expected dividends per share divided by the market price of the stock to give you a dividend yield. In other words, this measures the percentage return on your investment you will get in dividends. So let's take Altria, for example, at a 9% dividend yield. This means a $1,000 investment in Altria stock could yield you a dividend return of around $90. Okay, so that's just a rough estimate because companies change their dividends quarter to quarter or year to year. Typically, they like to increase their dividend per share. Companies are hesitant to decrease or pause their dividends because they understand that many passive income investors are relying on those dividends for income to support retirement or to build wealth. So they are hesitant to pause or decrease that. They will do that in some cases. For example, Disney paused its dividend at the onset of the coronavirus pandemic because it had to shut down its theme parks and it felt it was an emergency. It needed to conserve cash, and Disney has yet to restart its dividend payment since then. It might restart it in the next quarter, but not yet. So you can understand when there is an emergency situation and the company needs to conserve cash, it is able to pause, delay, or reduce the dividend payment. It's not a sure thing. It's not guaranteed that the company is going to continue paying or increasing the dividend. Now, Altria Group, I mentioned, offers a dividend yield of 9%. 3M offers a dividend yield of 6.4%. Both solid dividend yields for the passive income investor. Another thing I like to look at is the cash flow from operations to sales. This tells me how sustainable the dividend could be because the company is generating cash flow. If the company is not generating cash flow or sufficient earnings, then that dividend could be in danger, because that's how dividends are supported, through the company earning cash from its operations. So if it's not generating cash from its operations, how can it support the dividend, right? Sure, it can borrow, it can dip into the savings to pay that dividend, but that's not sustainable. That if it relies on that for too long, then it's very likely that a pause or a decrease is upcoming. So Altria Group, 42% trailing 12-month cash flow from operations to sales. 3M, 19% trailing 12-month cash flow from operations to sales. Both are solid numbers, with Altria Group an excellent number to be sure. And finally, the last reason why I'm going to highlight why I think these are two dividend stocks you can buy now to boost your passive income is because the stocks are not expensive. They're both trading at a forward price to earnings of less than 10. 3M is trading at a forward price to earnings of 9.637, and Altria Group is trading at a forward price to earnings of 8.118. So these are two dividend stocks selling at reasonable prices that you can buy today and reasonably expected to boost your passive income over the next 5, 10, 15, 20 years.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.